One thing that you'll find when you look at financial markets, some are open and some are actually closed. For example, Asian sessions opened first, followed by India, and then going through Europe, and finally the Americas. In a way, it's kind of misleading to look at global markets like this and say, well, they must all be actually trading. They're not, and this is why we need to use the futures. In fact, you can see right now the ASX inside Australia, that's closed. The Hong Kong Exchange, Shanghai, and Japanese markets are closed up. We can see Singapore is still open, but it's getting pretty close to closing. Parts of Europe are open, and yet the Americas are closed. Now, how do we get an edge on knowing what the American markets will actually do? This is very important data to collect. One thing that unfortunately a lot of people don't realize, the major market indexes inside the US control the direction of other markets. If the US markets are coming down, the rest of the globe will follow. But if that reverses around and the US market indexes kick up, that means that the other market indexes will kick up. This is why many people refer to the US futures before talking about what's happening in local markets. Therefore, the futures are incredibly important, especially if you're in Asia, or of course in Europe, or of course anywhere but the US. There's a way that we can tell what will happen inside the US markets by looking at the futures. This is vitally important, no matter if you're located in Europe, throughout Asia, or especially inside Australia and New Zealand. And it's also important inside the US markets as well. When you get a divergence between the futures markets and the spot markets, that is also significant. In this video, I'm going to take you through the futures that I look at, and it will give you an incredible edge no matter what you're trading. Let's run the numbers. Directional correlation is really important when looking at markets. Here we're looking at the VIX futures. This is this particular chart here. At the current time, we can see the VIX futures are pushing upwards. What is that doing to the S&P 500 futures? It's pushing it down. What about Bitcoin? It's pushing it down as well. And if Bitcoin is coming down, guess what's happening to all your favorite alts? They're bleeding. Now there's some really interesting things happening here. Look at the VIX futures. When it dropped down, it absolutely rallied Bitcoin, absolutely rallied the stock market. Now I ask you a question because it's a really important question. If we saw the VIX futures spiking up like this, should you be in or out of the market? Here's a little bit of a hint. One thing to keep your eye on, when the VIX is coming down, expect the stock markets to rally. When the VIX is flattening out, expect consolidation. And when the VIX starts to spike up, expect downtrends. One thing that's important to just be aware of, if I invert the scale of the S&P 500 futures, well, the VIX according to the S&P 500 futures, you can see how closely they're actually aligned. Now, what does this mean? It's pretty straightforward. If the inverted VIX is just following the directional movement of the S&P 500, that gives us an understanding that where the S&P 500 is, if it's coming down, the VIX is coming up. Now, why is this important? No matter what market you're in, you can use Bitcoin to understand risk on or risk off sentiment. It is an incredible indicator for that. And you can see right now, Bitcoin is telling us the VIX is coming up. And we know that's the case because we looked at the VIX futures. Now remember that the US markets are currently closed. So the S&P 500 futures, guess what? They're trading. They are awesome. And we should keep our eye on them. But there's a lot that we need to understand these particular charts. And the first thing is structure. What I'm going to do is to explain what exactly happened. Now let's put on the structural indicator. What we're seeing right here and right now is that the VIX just was coming up, starting to flatline around here, starting to consolidate. We saw that before. And all of this structural overhead resistance on the S&P 500 was simply too much for upward price progression to break through. Now, what does that mean? We saw a bit of a stalling out in terms of upward price momentum inside Bitcoin, inside the stock market. But when we got up to here, that particular level down there, which basically stopped the markets going up, this is a lot bigger. This is a very, very heavy level. Now, what does that mean to you? It basically means even though we had a gap and we raised ourselves up fairly fast, we were hit by all of these sellers. If you're looking at the futures, you would gain an understanding of all of these things. If you're waiting for the US market to open, you're way behind the 8-ball. What we can see from a structural perspective, we've lost this structural level of support. I'm just going to zoom in a bit. You can see here on the S&P 500, this 5400 level was realistically quite important. We did have a level of structure here, but we've lost it. This is favoring lighter structural levels around that 5350 mark and just a little bit beyond. But when you look down around the 5300 mark, that's our next level. So we know what's actually occurring inside market structure, and this is a very important thing to realize. Even though we had so much upward price progression, it looks like because there's so many sellers up here, and the futures market is a little bit different than the spot market, all of these sellers inhabiting this area is potentially going to close this upward gap. Now, why does it close the gap and why was it there in the first place? The answer is CTKS structure. When you get above a certain level, if it's fairly light resistance, it can get gravitationally attracted to higher levels. This is called a GW or gravitational well. What we're actually seeing now is that it's fairly light support. We could find ourselves all the way back at 52.54 or 52.44, I should say. Now, this markup is very special. If you're interested, you can find it in the 5 indicator pack in the yearly section of the website. This brings us to a pretty important point. What is the actual purpose of the futures market? Well, it's to predict the price of the major indices in advance. People are literally betting on the future. And when we look at the NASDAQ 100 E-mini Futures, we need to look at it structurally. So we can tell if there's good support, bad support, where the heck support is. And we can see around that 18,350, we have reasonable support, which actually favors that gap fill that I was talking about previously. Gap fills don't occur because gaps exist. They occur because of structure. The problem is, all the people that talk about filling gaps, they can't predict them in advance of price action. We can. There's a gap right here. There's a little one here, and there's one here also. What you want to do is to look at the S&P 500 futures, the Dow futures, the NASDAQ futures, and the Russell futures all together. What we're seeing here, we're seeing that when the VIX came down, and we know that's what pushed the markets up. We know it, but unfortunately very few people apart from us do. But this is the difference between stacking probabilities and just hoping. We can see that the Dow is following that structure. Notice how Bitcoin actually weakened first. I'll come back to this later. And you can see that now Bitcoin is aligning in. So this means if you were trading Solana or Pepe or Doge or anything like that, ADA, XRP, it's doing the same thing. I'll just give you a quick example. This yellow line is actually XRP. See how it's following the directional up and down price movement of Bitcoin, but it's selling down in a logarithmic fashion far more quickly. If we look at what's happening with Ethereum, that's that purple line. See how it's following Bitcoin's directional momentum. This means if you were investing or trading in Ethereum and you're not looking at the Dow, you're not looking at the Russell, you're not looking at the S&P 500, the VIX futures, or Bitcoin, my goodness, you're in trouble. What about looking at Solana? You can see this really light blue color, that's Solana. As the VIX tanked, what did Solana do? It took off. The alts are even more sensitive than Bitcoin. That's why we need to look at them. And what are we seeing right now? Well, we see Solana selling off. A lot of people will talk about Solana's news and different things like that, or it's Bitcoin news, and they never draw the correct conclusions, which is all markets are intercorrelated and interconnected. And we're looking at the Dow here, but it's giving a pretty good indication of where Solana was going. And don't forget, the US markets currently are closed. Now, with all of that said, we need to understand what the structure is behind the Dow. If we don't know how the Dow is structured from a structured perspective, structural support and structural resistance, we're in a world of hurt because we don't know where the gaps are. Remember, those gaps up can be really delicious, but if you've got a gap like this, you need to be careful. What futures literally do, they take all the sentiment inside the market and they systematically present it as price candles. We know that we have a level of structure just below the Dow's price. This could create relief, some relief across the indexes. Don't forget, they're all intercorrelated and interconnected. For those who have done the Profiting course and the Masterclass, you already know the Russell is incredibly important. And what have we seen here? Around that 1923 was fairly strong structural support, which has turned into structural resistance. We do have some support underneath. So when we're stacking probabilities, this is far better than a negative fresh air gap down towards 10% off. No, that's not the case. We at least have some structure underneath, but you can see that gap has pretty much been filled already. Now, why was that gap wiped out? The answer is the S&P 500 futures, and the second answer is the inverted VIX. And how could we seen that the VIX was starting to strengthen? The answer is Bitcoin. What's important for us to do right now is to look into Bitcoin structure and especially compare it across the S&P 500 futures and the VIX futures as well. You'll notice I've just drawn a little box in here. It makes the structural levels just a little bit easier to see. Okay, I'm going to put on the structural indicator. Now, what are we seeing here? This is pretty good stuff. Around the 91,700 mark is a fair amount of structural support. Also, we have a positive CTKS gap, so we could find ourselves back at 92,500. That could be pretty neat. That is the bullish case, and then we need to get above that 92,500 and convert all of these resistance levels into structural support. That could create a little bit of consolidation action before we go higher. But just please bear in mind that below 91,700 is a negative CTKS gap, which is coming all the way back to 89,385. Bitcoin at the time of recording was 91,934. We're starting to already see some positive price action because price is interacting with this structure. That's how powerful this is. We can do our analysis in real time. So what are we looking at here? This is a pretty important decider. If we don't get above 92,500, it means that a negative trend is in play and we'll likely visit lower levels. But getting above 92,500 confirms either consolidation or a bullish case. This is how you read structure. Now, we can't say just yet which direction Bitcoin is going because we need to look at the VIX futures. The VIX futures, as you know, show in the major index futures. The S&P 500, the E-mini futures on the S&P 500, the NASDAQ, the Dow, and the Russell. So this is why we must stack probabilities. At the current time, the VIX is going up, which is exactly what's placed this pressure. Now remember that Bitcoin is the #1 indicator of risk on or risk off activity inside the market. It is literally the best. It's kind of the VIX of the VIX, if you like. You can see right here that the VIX futures were coming down. And what was happening to Bitcoin at that time? You got it. It came up. It came up really well. It went from 88,000 all the way up to 94,000 plus. Now, what did it mean? the VIX started to base, and Bitcoin, being very, very sensitive, said, oh my gosh, VIX, you are basing. And after this kind of action, you would expect a spike up in the VIX. What did that do to Bitcoin and the main markets? It absolutely tanked them down and then weakened them. I hope you're seeing just how incredibly important it is to keep on looking not only at the cheat sheet, but at the futures as well. And what are we seeing right in here at the moment? We know why that bounce is occurring. It's structurally related. Now, of course, to get follow through, we need the VIX to start retracing. Now, what does that mean? If the VIX is retracing, the S&P 500, the E-mini Futures will be going up. The Dow Futures will be going up. The Russell Futures will be going up. The NASDAQ Futures will be going up. And also, total crypto market cap will be going up. This is how you stack probabilities. The key to being a really, really good investor and trader, and all investors become traders anytime they buy or sell. So you've got to do it correctly. You've got to do it well. Know where the futures are taking you. Going back to the NASDAQ futures, we can see that we're just literally in the middle, getting towards the middle of that negative CTKS gap. We would expect a lot of structural support around that 18,350 mark, but that actually means that all of that price action would be removed. Wherever you are located geographically, you really need to keep your eyes on the S&P 500 futures, the Dow futures, the Russell futures, and also the NASDAQ futures. What you can see right now, structurally the S&P 500, we could see the VIX actually spike up quite significantly because we only have light structural support below. This is not a problem. This is just a market movement to take advantage of and not be surprised by. When you look at the futures, you can make up your mind as to what is occurring and not be surprised about things. When we look at this particular price action, it looks like the VIX is set to absolutely explode. But does the 7,700 days worth of data actually confirm that, or does it say something else? We can see that we are literally at structural resistance. It's a little bit early to tell if we're going to confirm this as support and go higher, but this particular area is vitally important that the VIX fails and turns around. If the VIX comes down, you know precisely what's going to happen with the stock market, what's going to happen with crypto. And if you understand what's happening with the major market indexes, if you are buying and selling Tesla or Nvidia, MicroStrategy, anything inside the stock market, and you're not looking at the futures, you're in a world of hurt. Please make sure that you keep them on your radar. A directional association is good, that's something. But unless you know exactly what the structure is, you're going to be in trouble because you just literally won't know. Therefore, reading the futures gives you a lot of mental clarity. You can look at the futures and say, I know we've got structural resistance here. We've got light structure above, then a positive CTKS gap. If the VIX really decides to get going, it could do so, but it absolutely has to get through certain key levels first. And the only way that you can know that is to mark up your charts. And of course, if you would like us to mark up your charts with level 1 and level 2 standard certification, just go across to the yearly area and just search for 5 index futures pack. One thing to remember when the VIX was coming down, when it started to base, what happened to Bitcoin? It felt the weakness. Bitcoin also feels strength as well. Right now, Bitcoin is saying, yeah, VIX, I don't think you're going to get through that structural resistance. I'm going this way. The VIX may say, no, Bitcoin, I'm going to get through that structural resistance. And if that is the case, Bitcoin will come down. Just observing price action in its natural environment is what you must do. Let's have a look at the VIX again. Yeah, it's confirming what Bitcoin is feeling inside the market. Without structure, you wouldn't know why price is doing this right across markets. It's really important to also keep in mind that you need to look at total crypto market cap because it gives you an incredible edge inside the market. Total crypto market cap is picking up on Bitcoin's vibes that the VIX futures will not be able to get through that overhead structural resistance and will come down. But we just have to bear in mind what is the structure inside total crypto market cap. Now let's pop that on. You can see that literally, I'll just move this around a little bit so that you can see if there's any underpinning. Yeah, not much underpinning structure on total crypto market cap. But where did the structure come through? It came through the VIX futures. If you want to take your trading and investing to the next level, just combining your understanding of the structural levels on the futures is a superb way to do it. And remember, it was pretty much cascading down like a waterfall. And I said, this is likely to see it. And we knew why. We can literally read the future anyway with structural levels. But when you start to stack probabilities, you go to a whole different realm. And just going back to the VIX futures, it's getting pretty dirty. What I mean by that, it's not a clean candle. It's not washed. It didn't go up with any particular level of strength. And we know from the structure that what we're seeing right here and right now is all of this structural resistance getting into play. Now, if we do get above it, you've got different levels of structure above that, and then a quite positive CTKS gap. But if we lose this, we have a negative CTKS gap down to here. Just keep that area in mind. I'm going to go back to Bitcoin. Now, how do you interpret this? Just overlay the VIX futures on your specific chart. I've just done it on Bitcoin here. Now, what we're going to do is to invert this chart. Okay, let's just do a quick inversion. Now, what I said that Bitcoin could come, well, basically the VIX futures could retrace to here. That would actually take Bitcoin up to around that $94,000 area. Now, a lot of people would get really excited about that, but hopefully you're not. Because you know the structural levels, 94,000 on Bitcoin here is a structural support on the VIX. You are literally an institution of one if you know how to stack probabilities and read across charts. It's a really good idea to anchor your trades and investments in an understanding of the futures, these 5 futures, the VIX, the NASDAQ, the S&P 500, the Dow, and the Russell. What we're seeing right now on the VIX futures is exactly what we anticipated, and we're doing this in real time. There's no cherry picking of data here. If you're liking the content, please smash that like button and don't forget to subscribe. You're going to pick up tips that will make you an absolute fortune. And if you want to move into the professional realm, you can actually pick up the indexes, all marked up with level 1 and level 2 standard certification. You can see it makes a huge difference. In real time, I've told you exactly what's been going on as it has unfolded. Just like to zoom out a little bit on Bitcoin as overlaid with the VIX futures. One thing you can see here, the VIX served as an early warning system to that massive sell-off that we've just seen recently. See how the VIX spike, and you could see this before the VIX actually opened. This is incredibly important stuff. And you can see the directionality. Even though Bitcoin is doing this, it seems that they're not crossing the same path, but they are, because you're looking at directional correlation. Did it come down? Did it come down? Did it go up? Did it go up? Did it come down again? Yes, it did. Just because they don't perfectly overlay each other means absolutely nothing. Don't forget that Bitcoin trades 24/7 by 365. And the futures, well, they're much better than the stock market, but they're a little bit lazy. They've gone to sleep across different times, but they're way better than the stock market. So what you're seeing now, if you saw the VIX absolutely tank down like this, that gives you an understanding of what could happen. But what happened if the VIX went this way? That would also give you an understanding. Now, don't forget, I've inverted this VIX. So the actual VIX is different. it looks like that. But if I showed you that chart as opposed to showing you this one, you might miss the keys. It literally doesn't matter whatever exchange you trade in, whatever geographical region you are resident in. If the markets are closed or the markets are open, and if the US markets are closed, you just need the futures. And you need the futures even if the US markets are open. Divergences in the futures are a very good risk on or risk off indicator. If you're ready to take the professional leap, just go to ctksmethod.org and go to the yearly menu. Then you can just scroll down a little bit and you can pick up the 5 US Market Index Futures Pack. It is so incredibly valuable. It will make you a ton of money. And just remember, if the VIX futures start to arc up like this, you want to be very careful. And if they collapse, you want to be in. As a final question, you can see that Bitcoin has moved up really quite substantially. We were looking at a lot of red action, and we knew that structure was good on Bitcoin. Structure was also good on the VIX futures. And what does this mean at the current time? Well, it means the VIX has rebounded from that structure. Now just keep your eyes on those future levels. It will give you an incredible insight. What you want to do is to use it as an early warning system and plan your trades and investments. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.